today it's not just me in this video. There is someone else hanging out with me till the end. Let me introduce you, my brother Fibonacci. I know it may sound kinda funny at first, but stick around. You'll see why I called Fibonacci my brother. I'm not gonna get into his life story here, tout. You can easily look that up on Google and find all the details yourself. Fibonacci has three philosophies. The future is a mix of your present and your past. In other words, that happens in your future depends on our past experiences combined with the choices we make right now. The same thing happens in trading. Simply put, if we combine the previous market trend with the current market behavior, we can figure out that the outcome of a trade would be if we entered a position at that moment. The main question is, why should we even use Fibonacci? 1. Finding trading zone. 2. Finding historical market highs and lows. 3. Finding the market retracement level. 4. Finding the trade target. 5. Time analysis of the market. The next question we may have is, when should we actually use Fibonacci? 1. No valid trading zone in the trend. For example, in this afternoon we're seeing the market made a high, then dropped to form low, and then went up again to make a higher high, breaking its previous high. So here we have a BOS in direction of uptrend. We also know that after of every BOS, there is usually a correction in the opposite direction of the trend. If we want to find a valid trading zone here, we'll use a Fibonacci retracement tool. Now, if we take the bottom of the trend as the starting point of the Fibonacci and the top of the trend as the ending point, as you can see, the market has pulled back. Well, we also use Fibonacci in another place, and that's validating the trading zone in the current trend. So when we have a trading zone, we also use Fibonacci to see if they overlap or line up each other. For example, in this uptrend as shown, we had two BOS in direction of the trend. After the second BOS and the new higher high, this is the origin of the impulsive base. Now if we draw a Fibonacci retracement from the bottom to the top and combine our Fibonacci trading zone with this impulsive base, we can see that they overlap. The reason for this Fibonacci signal is the large amount of liquidity in the trend and the heavy behind the scenes trading. Let's go practice on the chart and learn it step by step. First, set up the Fibonacci setting like in the picture. Turn off all the levels except 0, 1 and 0.5. Then at the 0.71 and 0.79 level in this area. The colors are totally up to you. Choose whatever you like. In an uptrend, when the market makes a low in this area and then goes higher to form a high. I wanna see how far the connection goes after that high and low. So I draw Fibonacci, setting the starting point at that low and the ending point at the high. Right here, the market hit the 0.71 to 0.79 range. This is a star zone. So that's the first use of it. Here we have a high and the market has made a low, breaking a few previous lows. That shows the market is likely to make an upward correction. Let's see how the Fibonacci works here. If we draw Fibonacci from the top to the bottom of this move, we can see that after the low, the market's correction has reached the star zone area. You can also notice that this star zone overlaps with the base of the previous move, so this zone we've identified has a very strong trading value. In the next example, on a 1 hour time frame of gold, we are in a downtrend. During this move, a break of structure has happened. After such a break, we usually expect a pullback upward. until the market reaches an important zone, then continues its downward trend. If we draw Fibonacci from the top to the bottom of this move, we can see that the market has reached beautifully to our star zone area. On Bitcoin's 15-minute time frame, we're going to analyze the market in this downtrend and see if we can use Fibonacci to help or not. Here the market dropped and formed a lower low breaking structure. Then we saw a small pullback and it made another lower low which broke structure again. So I'm expecting correction to the upside until price hits a valid supply zone, then continue its downtrend. If we draw a Fibonacci from the top to the bottom of the move, our supply zone overlaps with the move's base, which makes this area super strong and valuable for us. On Ethereum's 15-minute time frame, you can see we're in an uptrend. When the market made a low, it was able to push up and form a high, creating a minor break structure. After the kind of break, I'm expecting a pullback to the downside until price reaches a trading zone. If we draw Fibonacci from the bottom to the top of this move, we can see that our supply zone overlaps with a strong base move, which means we found a very strong and high value trading area.